What went wrong? How could a company that once catapulted electric vehicles to mainstream recognition, that once carried the weight of an entire industry's hopes for a zero-emission future, lose its grip so suddenly? Today, we peel back the curtain on the whirlwind that's engulfing Tesla. An implosion set off by falling sales, battered investor confidence, and a staggering wave of public outcry that has spilled from social media onto the very doorsteps of Tesla's global showrooms. But the question remains, is this collapse truly irreversible, or is it simply a speed bump for Elon Musk's grand vision? This script dives headfirst into the perfect storm swirling around Tesla, drawing together the full range of factors that transformed the brand from a symbol of cutting-edge genius into an object of global controversy. By the time we reach the final scene, you'll be asking if this is the end of Tesla as we know it, or merely the first act in an even more dramatic saga. Grab a seat, because the unraveling of this electric dream is every bit as riveting as its origins. If you trace Tesla's path over the past decade, you'll find a steep incline until you don't. For much of its early run, Tesla seemed to shatter barrier after barrier. Wall Street elevated the company to unimaginable heights. At one point, Tesla's market capitalization soared above $1 trillion, an almost impossible figure for an automaker that produced only a fraction of the vehicles that legacy companies churn out every year. So, how did the bottom begin to fall out? The earliest warning signs surfaced in the realm of raw sales data. For years, Tesla cultivated fervent anticipation. Each new model debut felt like the release of a blockbuster movie. People lined up with deposits in hand for vehicles that were years away from production. But after a wave of hype for the Cybertruck and the Model Y, the excitement reached a plateau. Suddenly, the numbers didn't match the lofty expectations. It started subtly. In China, one of Tesla's biggest markets outside the United States, monthly deliveries began declining. Local competition from companies like BYD, NIO, and XPeng grew fierce, offering EVs that were cheaper or similarly priced, but packed with region-specific features. Then came Europe, a region that had once embraced Tesla as a cutting-edge, eco-friendly brand. Established automakers like Volkswagen, BMW, and Mercedes-Benz ramped up their EV offerings. Even smaller brands jumped into the fray, flooding the market with alternatives that chipped away at Tesla's share. Finally, the downturn crept into North America, the fortress that Tesla had called home. Demand for the Model S and Model X, once the ultimate symbols of premium electric luxury, tapered off. Even the more affordable Model 3 faced new competition from Ford's Mustang Mach-E, Chevrolet's Bolt EUV, and other emerging models. Suddenly, potential customers had real options. Meanwhile, the broader economic climate began shifting. Interest rates ticked upwards. Global supply chain disruptions affected deliveries, and rising inflation squeezed the finances of would-be EV buyers. People who once dreamed of owning a Tesla started second-guessing whether they needed an expensive electric sedan or SUV when gas prices ironically stabilized. The net effect was a glaring mismatch between Tesla's lofty valuation and its actual sales performance. Wall Street analysts noticed that Tesla's growth story no longer looked bulletproof. Retail investors, many of whom were super fans of Musk's visionary persona, started paying attention to more than just Twitter announcements. In short, the very foundation of Tesla's success, the unwavering belief that growth would continue indefinitely, began to crack. Once you see the numbers, you can't unsee them. And that was just the beginning. Wall Street operates on stories just as much as it does on spreadsheets. For the longest time, Tesla's story was irresistible. A genius entrepreneur leading the charge into a brave new electric world. Profits? Irrelevant. Traditional metrics like price-to-earnings ratios? Who needs them when you're building the future? That was the mindset that propelled Tesla's valuation into the stratosphere. But markets are fickle. They cling to romantic narratives until they detect any serious threat to those narratives, and then they turn brutal. The first blow came in the form of downgrades from major financial institutions. Analysts cited concerns about declining sales, waning demand, and intensifying competition. Observers wondered if Tesla had peaked too soon, saturating its core market of early adopters while failing to entice the broader mainstream. As the stock began slipping, high-profile investors who'd once championed Elon Musk's daring approach began quietly selling off their positions. Hedge funds that had loaded up on Tesla shares expecting unstoppable growth reversed course. Some short sellers, long ridiculed for betting against the electric darling, found renewed vigor. The stock's daily movements turned into a frenzy of volatility, with more red days than green. Amid this chaos, Elon Musk still had his loyal battalion of fans on social media. His tweets, once boosting morale, began sounding more defensive. He tried to reassure retail investors that Tesla's vision was intact, that the naysayers simply lacked imagination, but a sense of anxiety had already set in. Rumors floated around that Tesla's management had shared internal forecasts that were far more pessimistic than public statements. Whispers suggested that the top brass at Tesla recognized deeper structural issues like supply chain vulnerabilities and production bottlenecks that cast doubt on lofty delivery targets. Investors who caught wind of these rumors sold their shares in anticipation of more bad news. Before long, the dreaded question appeared in financial circles. Has Tesla lost its shine? For a company that once thrived on unstoppable optimism, the mere suggestion that it might be vulnerable triggered a chain reaction. And that reaction, as it turned out, was unstoppable. If there's one thing that truly alarms investors, it's when the people running a company decide to pack their bags. Leadership changes happen in corporate America all the time, of course, but Tesla's turnover rate escalated well beyond what anyone would consider normal. In early 2024, the CFO made a surprise announcement that he would step down. Then, the chief operating officer left within weeks. Vice presidents in charge of manufacturing, engineering, and global sales followed, each citing personal reasons or the desire to pursue new opportunities. But insiders painted a more troubling picture. They spoke of tension, disagreements, and burnout. Even more shocking were the insider stock sales. Kimball Musk, Elon's brother and longtime Tesla board member, offloaded millions of dollars in shares. Other board members, who had once passionately defended Tesla against critics, quietly reduced their stakes. For a company whose success hinged on public trust, these departures were damning. Media outlets pounced, speculating on reasons for the exodus. Some suggested that Musk's mercurial leadership style had become intolerable. Others pointed to the relentless pressure to hit production targets, especially as Tesla's expansions in China and Europe hit bureaucratic roadblocks. Meanwhile, Tesla's critics hammered away with a consistent narrative. If Tesla's future is so bright, why are key people leaving? Musk attempted damage control, posting on social media about how turnover was natural in a high-growth environment. He praised the talents of incoming executives while downplaying the significance of departures. Yet, employee review sites told a harsher story. Anonymous accounts described a workplace environment that had grown toxic and fear-ridden, with Musk micromanaging everything from engineering schedules to cafeteria menus. As the leadership vacuum deepened, Tesla found it increasingly challenging to address problems before they escalated. Plans to ramp up production of new models like the Cybertruck and the Tesla Semi faced hurdles. Ambitious goals, once taken for granted, now seemed out of reach. And for onlookers, especially investors, the string of exits served as a glaring red flag that the company was losing its most valuable resource: human capital. Of all the hype machines Elon Musk ever built, few had the same mesmerizing impact as the Cybertruck. Unveiled in a dramatic demonstration, remember the unbreakable windows that broke on stage? The vehicle captured imaginations worldwide. Its futuristic angular design, stainless steel exoskeleton, and promises of bulletproof durability turned it into a cultural phenomenon long before any customer took delivery. But hype can be a double-edged sword. By the time the Cybertruck finally began rolling out to early customers, expectations were sky high. People anticipated a near invincible beast that would outclass every pickup on the market. Instead, initial reviews painted a different picture: misaligned panels, software glitches, random squeaks and rattles, and rumors of structural weaknesses that compromised crash safety. Online forums erupted with disappointed owners posting pictures and videos of their brand new Cybertrucks showing peculiar defects. Some complained of water leaks after moderate rainfall. Others reported screens freezing mid-drive, forcing manual resets that turned off critical vehicle functions. The fiasco escalated when a group of owners filed a class action suit alleging false advertising regarding durability and reliability. Media headlines turned critical, pointing out that Tesla had prioritized spectacle over substance. Analysts questioned whether the company had sacrificed thorough testing to rush the product out. Even some of Musk's most loyal fans seemed stunned by the scale of the rollout issues. The Cybertruck was supposed to be Tesla's triumphant entry into the profitable pickup truck market. Instead, it became a cautionary tale of overpromising and under-delivering. The fiasco handed rival automakers a golden opportunity. Companies like Ford touted the dependability of their electric F-150 Lightning, and Rivian highlighted its rigorous testing process. In this cutthroat environment, Tesla suddenly found itself struggling to defend a product that once seemed destined for glory. If the Cybertruck fiasco embarrassed the Tesla, the full self-driving FSD controversies threatened the company's very existence. For years, Elon Musk repeatedly promised that full autonomy was just around the corner, fueling excitement among tech enthusiasts and adding billions of dollars to Tesla's valuation. Beta releases teased advanced capabilities, but also showcased glaring flaws, leading critics to question whether Tesla was using public roads as a testing ground for incomplete software. Accidents attributed to FSD malfunctions began making headlines. Some were minor fender benders, while others involved serious injuries and fatalities. The National Highway Traffic Safety Administration, NHTSA, launched investigations. Engineers at Tesla reportedly warned executives about the system's limitations, particularly around pedestrian detection and hazardous road conditions, but found their concerns overshadowed by Musk's insistence on pushing for faster rollouts. This tension came to a head when internal documents, leaked by a former employee, showed that Tesla's senior leadership knew the FSD technology was years away from safe, reliable autonomy. The whistleblower alleged that marketing materials and Musk's public statements often painted an overly optimistic picture. The revelations triggered a public relations firestorm, fueling claims that Tesla had misled both regulators and the general public. Class action lawsuits piled up. Federal investigators dug into whether Tesla's labeling of full self-driving was deceptive. Certain states considered banning the feature altogether until it met stricter safety standards. Beyond the legal implications, the brand damage was incalculable. A company that once epitomized the next frontier in mobility was now under suspicion of endangering lives for the sake of rapid innovation. The fiasco put Tesla in a chokehold. On one hand, they needed to continue refining and testing FSD to validate the technology's viability. On the other, the negative publicity and legal threats made every move a tightrope act. The drama around FSD crystallized a broader fear that Tesla's penchant for bold promises was consistently outpacing its actual engineering capabilities. While software controversies raged online, a physical threat emerged in the real world. Across the globe, Tesla showrooms and service centers became high-profile targets for protest and vandalism. Some gatherings were small and peaceful, commuters holding placards that denounced Elon Musk's political leanings or calling for accountability over alleged safety oversights. But many demonstrations took a more aggressive turn. In places like Berlin, Shanghai, and parts of California, activists spray-painted slogans across the iconic Tesla T logo. Certain service centers found broken windows and damaged property at dawn. In extreme cases, supercharger stations faced outright sabotage, cut cables, smashed charging ports, even deliberate arson. The level of hostility baffled those who remembered the near-worshipful admiration Tesla once commanded. What triggered this wave of unrest? Several factors converged. Environmental groups that once hailed Tesla as the poster child for green mobility grew disillusioned by the company's labor practices, Musk's political statements, and the alleged disregard for local regulations in factory expansions. Social justice advocates criticized Musk's closeness to political figures they opposed. Then there were the frustrated customers who felt duped by product promises. Their anger found an outlet in physical protests. No matter the motives, the sight of raucous crowds picketing Tesla premises was jarring. Many prospective buyers grew wary of even visiting showrooms, not wanting to step into a battleground. Social media circulated viral footage of scuffles between Tesla employees and protesters. The brand that once symbolized innovation and hope had become, in many eyes, a symbol of corporate hubris. With each new act of vandalism or demonstration, media outlets amplified the chaos, overshadowing any positive news Tesla tried to promote, like new software updates or incremental production milestones. The protests became a relentless PR nightmare, painting Tesla as a company under siege both inside and out. Long before the showrooms were under physical siege, the war of words had begun online. Over the years, social media platforms had been Elon Musk's playground. Twitter, in particular, served as his microphone to the world. From announcing Tesla developments to poking fun at short sellers, Musk's tweets shaped public opinion and the company's stock price instantly. That era of adoration eventually gave way to a darker phase. Hashtags like #boycott Tesla, #dump Musk, and #ex-Tesla owner trended regularly. People who once proudly posted about their new Model 3 or Model S began sharing stories of why they sold their vehicles. Criticism spanned multiple angles: disillusionment with Tesla's build quality, accusations of Musk's political hypocrisy, claims of poor customer service, and broader dissatisfaction with the cult around the brand. YouTubers and podcasters, some of whom had built their channels on praising Tesla, shifted their tone drastically. They compiled lists of complaints, from quality control nightmares to inconsistent customer service experiences. These videos often garnered hundreds of thousands, if not millions, of views, fueling an echo chamber of negative sentiment. Online communities became divisive battlegrounds. While hardcore Tesla fans still defended every Musk tweet, an expanding group of detractors demanded refunds, posted pictures of mechanical failures, or highlighted delayed software updates. Tech forums bristled with debates about whether Tesla's technology was dangerously oversold. Amid this digital revolt, the key challenge for Tesla was the collapse of its once devout fanbase. Because the company historically spent very little on traditional advertising, its success depended heavily on word of mouth and social media buzz. When the chatter turned toxic, new buyers became hesitant, overshadowed by a barrage of cautionary tales and outraged commentary. It became clear that Elon Musk's personal brand, previously an asset, was transforming into a liability. The more he tweeted controversial takes on politics, on business, on societal issues, the more potential customers turned away, convinced that Tesla no longer reflected their values. The internet had once been the wind beneath Tesla's wings. Now it was a storm battering the company from every angle. Elon Musk's political alignment was never straightforward. Initially, many perceived him as progressive due to his environmentalist ambitions and futuristic outlook. Over time, though, he took a series of political stances that ranged from libertarian-leaning to outright contrarian. The defining moment came when he decided to align publicly with Donald Trump. To Musk, the move seemed strategic, forging ties with an administration that might offer substantial tax breaks, deregulation, or government contracts. The cost-benefit analysis looked promising on paper: secure American jobs, expand manufacturing, and gain a seat at the table with policymakers who could shape EV legislation. But Tesla's core consumer base had deep environmental and liberal sensibilities. Aligning with a president known for polarizing policies caused a wave of outrage. Progressive Tesla owners felt betrayed. Environmental groups criticized Musk's coziness with an administration they viewed as anti-green, and liberal media labeled Musk a sellout. The backlash reached a tipping point when Musk appeared at events praising Trump's economic policies. Images and sound bites circulated on social media, fueling the narrative that Tesla was no longer the heroic underdog fighting climate change, but rather a corporate behemoth entangled in political opportunism. Suddenly, Tesla's early evangelists, those who wore the brand like a moral badge, found themselves questioning the integrity of their beloved automaker. Simultaneously, some conservative circles still regarded electric vehicles with suspicion, viewing them as government-subsidized projects. Musk's partial shift into the Trump camp didn't guarantee the brand a warm welcome in conservative markets. The net effect? Tesla managed to alienate a chunk of its existing customer base without necessarily winning over a substantial new audience. In a politically charged climate, straddling both worlds left Tesla stranded in no man's land. The political saga took an even more dramatic turn when the Trump administration introduced the American EV Leadership Act. On the surface, the legislation championed domestic manufacturing, awarding hefty subsidies and tax incentives to automakers that kept at least 80% of their production in the United States. The catch? Tesla's sprawling global operations, factories in Shanghai, supply chains stretching across Asia, Europe, and beyond, didn't qualify. Practically overnight, Tesla lost the financial advantages it once enjoyed under earlier EV subsidies. Meanwhile, Ford, GM, and even newer startups like Rivian and Lucid, which had centered their supply chains domestically, gained a cost advantage. For Tesla, each vehicle sold in the US became relatively more expensive, forcing the brand to cut into its margins or risk losing price-sensitive consumers. This policy shift also dried up government fleet contracts that Tesla had relied on for bulk sales. Municipalities and state agencies pivoted to local automakers. The blow was both financial and reputational, reinforcing the notion that Tesla was no longer the favored child of America's clean energy future. Media narratives proliferated. Political commentators pointed out the irony. Musk had courted the Trump administration only to be undercut by a new piece of legislation that favored Tesla's more domestically concentrated rivals. The entire episode underscored how precarious it can be for companies to bank on shifting political winds instead of stable, genuine consumer demand. Tesla's fortunes abroad had always served as a critical buffer against any setbacks in the US. For a time, the Shanghai Gigafactory was heralded as the crown jewel of Tesla's international expansion. China embraced Tesla with open arms, offering subsidies and streamlined bureaucracy, rare privileges for a foreign automaker. However, the relationship soured as geopolitical tensions rose. When the Trump administration ramped up trade restrictions on China, Beijing responded with measures that specifically targeted foreign EV makers. Suddenly, Tesla's once privileged position in China evaporated. Local competitors soared in popularity, boosted by government endorsements, favorable tax policies, and a fiercely nationalist consumer base. Tesla's sales in China nosedived. Videos circulated on Chinese social media showing Tesla owners complaining about quality issues and criticizing Elon Musk's political posturing. Hashtags encouraging consumers to buy Chinese for Chinese roads trended for weeks. Provincial governments added layers of taxation or inspections that effectively penalized Tesla. As a result, deliveries dwindled and overhead costs skyrocketed due to renegotiated supplier contracts. In a few swift moves, the Chinese market, once accounting for a staggering share of Tesla's global revenue, became far less lucrative. The brand's downfall in China accelerated the broader collapse, depriving Tesla of a key revenue stream that might have otherwise cushioned the financial blows coming from the US and Europe. With sales plummeting and public sentiment at an all-time low, Musk resorted to his trademark approach: saturate the media landscape with his presence. He live-streamed pep talks to employees, promising that Tesla was on the cusp of an epic comeback. He filed lawsuits against critics claiming defamation while simultaneously fanning the flames of controversy on social media. These antics, once praised as visionary showmanship, now appeared increasingly desperate. Media outlets that had once reveled in covering Musk's every move began pointing out the contradictions. On one hand, Musk urged retail investors and employees not to abandon Tesla stock. On the other, top executives were quietly selling their own shares. The market saw through the spectacle. Tesla's share price dipped further. In boardrooms around the country, the meme of Elon Musk as a fearless pioneer shifted to a less flattering portrait, an embattled CEO fighting to preserve the last shreds of a faltering empire. Musk's personal brand, which had always been inextricably tied to Tesla's success, bore the brunt of the backlash. When he lashed out at journalists or took political stances that clashed with mainstream EV buyers, it only accelerated the public's pivot away from Tesla. For the first time, many recognized that what had powered Tesla's rise, an unshakable belief in Musk's charisma, could also power its fall. The realm of government scrutiny and legal strife soon expanded beyond self-driving capabilities. A wave of lawsuits landed at Tesla's doorstep, ranging from allegations of manufacturing defects to claims of deceptive advertising. Regulatory agencies like the Environmental Protection Agency, EPA, and Occupational Safety and Health Administration, OSHA, also took a closer look at Tesla's factory conditions. Former employees came forward, some under whistleblower protections, describing intense work environments with unsafe practices, especially as production pressures mounted. Others offered evidence suggesting Tesla fudged environmental reports or cut corners on safety measures to maintain ambitious output targets. Social media turned into a repository of leaked documents and internal emails, each more damning than the last. Lawsuits weren't confined to the US either. In Europe, regulators examined whether Tesla misrepresented autopilot features. In China, investigations examined whether Tesla violated consumer protection laws. From an investor standpoint, the legal onslaught exacerbated the company's precarious financial situation. Litigation costs rose, settlements loomed, and recall expenses threatened to balloon. The question transformed from, will Tesla remain profitable, to, will Tesla survive it all? Throughout its highs and lows, Tesla's greatest asset had always been its brand loyalty. Owners were more than just customers, they were evangelists. They showcased their vehicles to neighbors, eagerly demonstrating autopilot features or touting zero emissions. Word-of-mouth marketing was the lifeblood of Tesla's sales strategy. But brand loyalty is fragile, and once it cracks, it's nearly impossible to mend. The combination of product disappointments, political missteps, and social media revolts shattered the faith many held in the company. On Tesla's own online forums, once a bastion of brand worship, posts popped up with titles like, "I sold my Tesla, here's why," or "Is this still the same company I believed in?" Surveys taken by research firms showed a precipitous drop in Tesla's Net Promoter Score, NPS, a key metric that indicates how likely current customers are to recommend the brand. The same surveys indicated that many prospective EV buyers were pivoting to other manufacturers. In neighborhoods where Tesla once dominated suburban driveways, brands like Rivian, Lucid, and Ford EVs started appearing in equal or even greater numbers. This shift was more than just a matter of sales. It signaled that the emotional bond people felt with Tesla was dissolving. Once the intangible sense of belonging erodes, it's incredibly difficult for any brand to recapture that magic. The ramifications stretched far beyond immediate revenues, threatening Tesla's long-term standing in the growing EV market. As the storm grew, Tesla's communication became increasingly defensive. Musk and other spokespeople insisted that fluctuations in stock price and sales were short-term, the result of media manipulation or orchestrated smear campaigns. They accused short sellers and rival automakers of fueling negative press. For a while, some devotees believed this narrative, but the cracks in that story became too large to ignore. Internal memos leaked, suggesting Tesla's leadership was scrambling for solutions but lacked a coherent strategy. Plans to expand gigafactories in new regions were quietly shelved. The momentum that had once felt unstoppable sputtered. Musk's public addresses teetered between bravado and desperation. In one breath, he'd promised groundbreaking updates to FSD that would revolutionize driving. In the next, he'd claimed Tesla was being persecuted by biased regulators. The conflicting messages only eroded public trust further. Some employees described this era as the final stage of denial, a phase where management refused to acknowledge how dire the situation had become. Rather than reevaluating core issues like quality control, customer relations, and leadership stability, they doubled down on contrarian marketing stunts and polarizing social media statements. The gap between Tesla's official narrative and on-the-ground reality widened, pushing the company deeper into a credibility crisis. In the end, Tesla's unfolding saga stands as a stark reminder that even the mightiest brands can falter when confronted by a maelstrom of controversy, shifting consumer loyalties, and leadership missteps. What was once a monolithic force pushing electric vehicles into the mainstream now faces an uphill battle to reclaim trust, reignite innovation, and mend reputational fractures. Whether it emerges stronger from this crucible or sinks under the weight of legal battles, public scrutiny, and market competition remains an open question. Yet if Tesla's history proves anything, it's that this company knows how to pull off the unexpected. The only real certainty is that the world will be watching, eager to witness whether this once unassailable empire can reinvent itself once again or fade quietly into the background of automotive history.